For more on today's action, let's now welcome in Bob Dahl, Crossmark Global Investments CEO and CIO. Bob, always good to have you on the show. Bob, we've had some strategists on this week, smart folks like yourself, and some of them kind of suggested, don't overthink this. The economy's resilient, inflation seems to be under control, earnings growth is decent, risk on, at least in the near term. Is that how you see it, Bob?
For now, yes. We also have the seasonally strong period to the end of the year. All news is good news. Good news is good news. Bad news is good news, and stocks go up. I think a lot of people have high hopes for a new administration, continued good news on inflation. The list just went through. I'm not sure it's going to be that simple, but for now, let's not overcomplicate it, as you suggest.
Well, we got to overcomplicate it a little bit, Bob, right? Because we got to look for what are the potential speed bumps on the horizon. So I am curious, what could take the air out of the Trump trade? What are you watching for?
Carefully watching inflation. In our view, it has bottomed. It never got down to the Fed's hope for 2%. Absent a recession, I don't think it's going there. I think it will creep higher. The Trump policies are probably more inflation than the Harris policies might have been. So we've got to watch that carefully, particularly when you have multiples and other valuation measures as high as they are. I think the stock market was expecting 2% inflation as an example. We've got to watch the labor market as well, Julie. It's shown signs of some risk at the edges in recent weeks and months. Not horrible, but slowing. What's that going to mean for the economy, for hiring, for earnings?
Bob, when you hear headlines like you saw today, right, and certainly you're front and center for the market, Trump talking tariffs, these new pledges on tariffs, you as a strategist, Bob, what did you make of that news? What did you make of those headlines? I'm sure clients were asking you.
Yeah, I think a lot of people are hoping that the other voices in the administration say, Mr. President, not so fast. And yet he seems hell-bent on getting this done on day one. We had hoped that those tariffs were threats for bargaining chips, and maybe they still are. But if we put in his desired hikes kind of globally on day one, I think the economy will have some trouble. So we're going to be watching that very carefully.
Before all of that, of course, and on the other things that you're talking about, we've got PCE tomorrow morning, of course. We're going to have another jobs report before long. And then, of course, we're going to have the next Fed decision. How important are all of these going to be to the market? Or, how do you think people are weighing these factors right now, given that all this fiscal policy is expected to change?
Julie, they're always important, but maybe less important than usual because all the dialogue, as you hinted, is around, okay, what's this new administration going to do? What will corporate tax rates look like? Will the tax cuts that are expiring at year end be renewed for a period of time? How long? And back to the tariffs. So I think those macro further down the line issues are going to be more important to investors than the read on the three items you just mentioned for the past month.
So, given all of this, what do we do strategically here, Bob? I mean, we keep seeing stocks hit records on a pretty consistent basis here. Is that what people should sort of expect from here, I don't know, as far as the eye can see?
Yeah, the line I've been using, Julie, is we are in a high-risk, momentum-driven bull market. Bull market obviously means path of least resistance is higher. Momentum takes a lot of connotations. Among them are, oh, you're buying XYZ, let me buy some too before it gets away from us. And the high risk part is valuations are high. The market's discounting an environment that's got to be nearly perfect. And my guess is after the first of the year, we'll wake up and say, it's not quite perfect like the market is suggesting with price earnings ratios on trailing earnings in the mid-20s, on forward earnings in the low 20s.
Bob, we did get Fed minutes today, no fireworks there, pretty uneventful, but I am curious, what do you expect from Jay Powell next month? Is it a pause or a cut? What are you expecting, Bob?
Well, as you know, what the futures markets are suggesting, we've all along thought that he will go again, which will complete 100 basis points of easing since he started in September, and then maybe take the pause. That's our best guess. On the other hand, if he does nothing, that wouldn't totally shock us. But, his last words were, we're not in a hurry. to cut rates. Well, what does that really mean relative to what you've been doing and what you're saying? So there's a little confusion and uncertainty there to add to all the uncertainty that we've all gone through in these last few minutes.